Bracing for economic turbulence, navigating America's looming financial crisis and opportunities ahead. The United States is on the verge of a major economic shakeup. Forecasts predict a 50% drop in the stock market, a 40% decline in real estate values, a 30% devaluation of savings accounts, and a threefold increase in unemployment. However, those who act now may find significant opportunities. Recognizing the economic fault lines. In his farewell address, President Reagan famously called America a shining city on a hill. While the nation remains wealthy and advanced, hidden vulnerabilities threaten its economic stability. These weaknesses are part of a broader issue that government intervention alone cannot resolve. Individuals must prepare for the potential economic downturn. A grim economic outlook. There are financial vulnerabilities forming, posing a threat to those unprepared. These vulnerabilities extend beyond a potential stock market crash. They encompass a looming real estate devaluation, pension fund crises, the weakening dollar, and possible conflict with China. Each factor is significant independently, but collectively, they present a monumental economic challenge. The 5 key economic vulnerabilities. Let's explore the 5 primary economic vulnerabilities that are a concern. Vulnerability number 1, the imminent stock market decline. While the stock market is peaking, this surge is unsustainable. Indicators such as the U.S. government bond market, rising gold prices, and inflated price-to-earnings ratios suggest an impending collapse, potentially leading to a 50% market correction. Vulnerability number 2, the impending real estate devaluation. Housing prices have skyrocketed due to government borrowing, creating a bubble as incomes lag behind. When government spending decreases, housing prices will need to drop by 40% to match affordability, erasing much of homeowners' equity. Vulnerability number 3, the approaching pension fund crisis. The shift to remote work during COVID has severely impacted the commercial real estate market. Banks and pension funds heavily invested in commercial properties face substantial losses, endangering a potential $6 trillion disaster. Vulnerability number 4, the rapid pace of de-dollarization. China's efforts to replace the US dollar as the world's reserve currency could destabilize America's economy, causing an 80% stock drop and rampant inflation. Vulnerability number 5, potential conflict with China over Taiwan. The risk of a military confrontation with China over Taiwan is significant. Taiwan produces 90% of the world's advanced semiconductors. An invasion would disrupt global chip supplies, affecting everything from smartphones to military hardware, causing severe economic disruption. Preparing for what lies ahead. While these vulnerabilities present serious threats, there are strategies to protect yourself. Here at All Things Money, we provide guidance to navigating these challenges. We will continue to offer insights into the root causes of these economic vulnerabilities and outline steps to safeguard your wealth and quality of life, so be sure to subscribe to our channel. Understanding modern monetary theory's impact. The embrace of modern monetary theory, M&T, has resulted in unchecked government spending and soaring national debt. This debt is now unsustainable, with interest payments exceeding Medicaid expenditures. The repercussions of this economic policy are undermining our economy's foundation. Conclusion: proactive measures. The impending economic storm is unavoidable, but you can take steps to secure your financial future. By understanding the causes of these economic vulnerabilities and preparing accordingly, you can face the challenges ahead. Our channel, All Things Money, provide valuable insights and strategies to help you succeed in the forthcoming economic climate. Don't let the collapse catch you off guard. Act now and subscribe to protect your financial security and capitalize on the opportunities that arise during economic upheaval.
As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.